What is traded in Forex? Forex involves the trading of currencies. This means that market participants buy and sell different world currencies. Since each country has its own currency, the Forex market focuses on currency pairs that include two currencies. The Forex market is global and decentralized, meaning currency trading can take place anytime and anywhere in the world. Let's take a closer look at what is specifically traded in Forex. Currency pairs. Currency pairs are the foundation of Forex trading. Each currency pair involves two currencies, the base currency and the quote currency. The goal is to buy one currency and sell the other. The price of a currency pair indicates how much of the quote currency is needed to purchase one unit of the base currency. Categories of currency pairs. Currency pairs are typically divided into several categories based on their liquidity and presence in the market. The main categories include 1. Major currency pairs. Major currency pairs consist of the largest and most traded world currencies, which have a strong presence in the market. Most trades are conducted with these pairs. They include the US dollar and other key currencies such as the euro, British pound, Japanese yen, and Swiss franc. Examples: Euro US dollar, British pound US dollar, Japanese yen, Australian dollar o US dollar o Swiss franc. These pairs are all liquid because they are associated with the world's largest economies. 2. Cross-currency pairs. Cross-currency pairs are combinations of two major currencies but do not include the US dollar. For example, currency pairs like Euro sterling or Euro Japanese yen are traded. Examples: Euro sterling, British pound, Japanese yen, Australian dollar, Japanese yen. These pairs are less liquid than major pairs, but remain very popular among traders. 3. Exotic currency pairs. Exotic pairs include one major currency and one currency from a smaller economy. Trading exotic pairs tends to be riskier as they are less liquid and often subject to greater price fluctuations. Examples: US dollar Turkish lira, US dollar South African rand, Euro Indian rupee. Exotic currency pairs can offer high profits but also high risks due to volatility, political issues, or economic factors in these countries. What is traded in other markets? A. Commodities. It is also possible to trade certain commodities, though they are not as popular as currency pairs. Commodity trading involves futures contracts or CFDs, contracts for difference. Commodities such as gold, silver, oil, and other valuable raw materials are also traded on currency markets. Examples of commodities traded on Forex. Gold, XAU USD. Gold is clearly the most traded commodity. Silver, XAG USD. Oil, WTI or Brent. B. Stocks and stock indices. Some brokers offer trading in stocks and stock indices through derivatives such as CFDs. Examples of stocks and stock indices: S&P 500, US 500, DAX, DE30. Individual company stocks. For example, stocks of companies like Apple, Tesla, or Microsoft. Stock indices. These indices track the performance of a group of stocks within specific regions or industries, such as S&P 500. Stock indices can be traded using CFDs, meaning the trader does not acquire physical shares but trades the price difference of the index. C. Cryptocurrencies. Cryptocurrency trading is conducted in the form of CFD contracts, allowing traders to speculate on price movements without needing to own the cryptocurrencies themselves. Examples of cryptocurrencies traded on Forex: Bitcoin, US dollar, Ethereum, US dollar, Ripple, US dollar. Cryptocurrencies are highly volatile. Their prices can rise or fall rapidly, creating both opportunities and risks for traders.